time came when the ticker tape in the broker's office told a new story. It was panic. 16.5 million shares of stock sold in a single day.
Ladies and gentlemen, welcome back to Stock Dirty to Me, the number one podcast for investors on Facebook. I am, of course, your host with the most, Phil Better, and with me today is the stock bro himself, Tony Szymanski. Tony, how are you doing today?
Oh man, I am fantastic.
Yeah, even with the market going up and down with your money?
Dude, I love losing money every day. What's better than losing money every single day?
I don't know, maybe making money every single day? I don't know.
No, I have been hedging my account a little bit. Something that I haven't really talked about a lot, and we haven't talked about too much in the group. The topic of leveraged ETFs has been brought up a couple times.
Yes,
and we've talked to So one ETF that I've been buying the last probably like 2 weeks on and off and timing it pretty good, actually. I've been getting lucky. Is an ETF called SQQ. Now, if you're going to do this strategy,
give me a second. Let me bring SQQ. It's SQQ, right? Two Qs.
SQQQ. Yeah,
3 Qs.
Yeah. So what
This
it
is the
does
Pro
is
Share Ultra Pro Short QQQ ETF at $58.
Yeah. So
that's it. All right. So I'm going to bring it up on screen here.
Really, the price. So the price of it is really irrelevant. Because if you pulled up like a 5-year chart, it's probably really bad.
It's horrible. Holy shit! It started off at 3K.
And the reason that is because what this ETF does is it basically shorts QQQ, which is the NASDAQ, and it's betting that the NASDAQ is going to go down. So it goes in the opposite direction of whatever the NASDAQ does. So if the NASDAQ goes up, it goes down, and vice versa. But it does it 3x. So on days when the market's getting crushed, like there was one day where QQQ was down like 4.5% a couple days ago, and I put a pretty good chunk of money into SQQ, and because I saw in pre-market that it was getting hammered, so I took a bet on it, and I was like, you know what, my portfolio is going to get hit pretty hard. I'm going to put some money into this, and I'm going to sell out of it that day. So I did, and I made like 13-14% profit in a couple hours on it, and then I just sold out of it. Now, this isn't a strategy that I recommend people do, and you have to have some good timing, and you quite frankly, you have to get a little bit lucky. So what I do is I'll every day, especially the market's just so volatile right now. Every day I look at pre-market, and I just kind of examine it at like 6 in the morning, 7 in the morning, 8 in the morning, 9 in the morning. And I look at trends, and I've been taking a bet that the market's going to stay red all day, or it's going to stay red for a couple hours. So I'll watch it, and I'll see where it's trending, and I'll stay in SQQ for a couple hours, and I'll just sell out of it that day.
Nice. And we got Maria coming in saying that nice, you're swing trading, which it is a type of swing trading.
It is swing trading. Now, this type of trading, well, technically I'm day trading. I'm not swing trading. Yeah. Which we always talk against. And yes. I do agree that it's a bad strategy. But in this situation, when the market is so volatile, and it's some days it's really clear, you could tell right away we're going to have a bad day. And those are the days I jump in with that, and I'll ride it I won't wait long. Like if I get even just 5% out of it, I'm out, because if the NASDAQ drops 1.5%, that's a 5% profit for me. I'm out. You know what I mean? And I could just do that every freaking day.
Don't be greedy. That's the number one rule.
So I've been keeping cash in my account so I can actually do these day trades without getting flagged as a pattern day trader. That's how I'm able to do it. And
Smart man.
you have to have over 25,000 in your account to do that. I believe it's over 25,000 in collateral and cash and things like that. But if you want to do something like this, and there are days where you could tell pretty clearly, like, oh, we're going to get hammered today. I might just buy SQQ as the market opens. I'll ride it out because if the Nasdaq drops 1%, you made 3%. I mean, it's not a lot of money, but 40, $50 here, $100 here. One day I made like
Hey, that's
150
money.
bucks.
That's
That's
compounding
money.
interest,
Yeah.
man. Compounding interest.
So I just sell out of it and then I'm holding it in cash right now. So all the money I've made, I've gotten really lucky, honestly. It's kind of more lucky than good type of thing where I've learned patterns and but
You're
so
increasing your knowledge.
now,
You're increasing your knowledge,
yeah,
which is important.
yeah, I always knew about that leverage ETF and I always advise people not to do it. But when the market is so volatile and clearly headed in a bear direction, you can get away with doing stuff like that and vice versa. But anyways, that's a strategy that I've been using, and they actually have one for the S&P too that shorts the S&P, and it's like a leverage on that. I like to use. Honestly, I wouldn't use that one. My advice for people is not to use that one because the S&P doesn't have crazy volatility like QQQ does, where you can actually get away with that, and you could pretty clearly see where it's going throughout the day. Unless you're looking at something like today, which was wild. Today was absolutely wild. Like at one point, we're down like 3-4%, then it's up, a 0.5%, and it's down again and up again and down again. It was crazy. I did not get in today because I saw it was just swinging too much, too unpredictable. So anyways, I know a lot of people want to talk about what's going on and where the market is headed, what direction we're going in.
Yeah, we have
And
a few questions from
yeah,
the group I'm going to pull from. But
yeah,
first,
go
we
ahead.
got our good friend Mark, who's coming live from your backyard. Um, always interested. He's like, can you guys advise, other than dollar cost average, that's DCA, how
I
one
just
could
talked about it. Yeah, I just talked about it. He should rewind if he just
yeah,
jumped in.
yeah. You can see what kind of day it's going to be pre-market. I get up at 4 a.m. and watch it. Yeah, that's a good thing. But I have
Yeah,
another question that just popped up in the group chat here from Karol Podnowski. Sorry if I'm mispronouncing your name. For the greater return, is it better to buy SPY/VU or QQQ or maybe Apple if it goes down further? It's probably wiser to go
yeah.
Apple, I would say.
Um,
From a non guy who doesn't study the stock market or
yeah.
anything like that, Apple seems to be the one that's going to rebound probably
I
quicker.
I would agree that Apple, if you're looking for something where you could potentially get a good return faster, Apple would probably be your best bet because Apple seems to be relatively inflation proof because people are always going to buy phones and Apple products. I mean, even if you don't, people will go out of their way to take out a loan to get an iPhone if they absolutely need it. Like inflation's not going to matter that much. They're always going to be able to sell phones. We're all addicted to our phones. Um, but as far as QQQ and SPY or VU, I would say that your safest bet is the S&P 500 because the Nasdaq QQQ actually, a lot of people don't realize this because QQQ has been incredible over the last 10 years. But if you pull up a chart of QQQ all time,
All right, give me a
if we
second.
can
Let me
pull
bring.
that up on the screen,
Yeah,
there
I'm
was
getting
a time,
Max.
there was a time after the dot-com crash, in periods of high, yeah, there, see right in the beginning there. If you look at its peak, is probably trading around, if you click that, I don't know what it was trading at.
Here, let me zoom in here. Was that about
Okay,
one?
so go off of the peak one and click and hold and then drag it all the way until it goes past 118 again. I think it took like 12 years to rebound. It was like an insane. uh, So so go back down, 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 down to where it says like plus. So $6 is close enough. Right there, right there.
There we go.
So 2014. So from 2001 to 2014, it took 13 years for QQQ to recover after that crash.
Jesus.
And that's because those companies, the NASDAQ is like heavy tech, was so high, it was so overvalued, and a lot of these internet companies just went absolutely broke to zero. A lot of them failed, and it just absolutely destroyed the NASDAQ for 13 years. Whereas SPY, I know this recovered much quicker.
Let's check this. Spy.
I think it was like 4 years. It was much faster.
Max. Is this
Uh,
Spy? S&P.
yeah,
Yeah.
it's been around a lot longer, so the history.
All right. So we're going to go for, let's say, yeah, it's always been up. There's the last crash was right here in the 2009.
Well, that was the financial crisis.
Yeah, this is with the
which
financial crisis.
that might
So
have been the longest time for it to recover. I think it was like 4.5 years it took to fully recover.
yeah, so we'll say it was at its height at 48.
Yeah.
And when did it get back to 48?
It was like 2012 or
Here,
it was the end of 2012.
Yeah, February 13th.
Yeah.
We'll go
So
February.
about 4 years it took to recover, where the NASDAQ once again took a lot longer. So I would say, and the and a lot of people don't understand, like when you look at these charts, it's like, oh my God, my money's going to be down for 4 years, or, I'm going to have to wait 6 years to recover. No, this is why it's so important. That is assuming that you're buying at the peak all the time, right? So if you're dollar cost averaging every week, you're going
Like
to
if you're
recover.
buying here,
Yeah,
you
you're
are
going to
making
recover
money
way
every day.
faster.
Yeah.
You're going to recover way faster than 4 years. You're probably recovering about 12 to 18 months, which, is still a lot of time to be in the red. But if you keep, this is why I keep saying it's so important to keep buying when the market is down and it's in those lulls where you see all those dips. Because if you just stop buying, it is going to take you much longer to recover. And you're not taking advantage of those lower prices. But what other questions do we have? Because I wanted to get into a little diatribe after.
Yeah. So someone's asking about Musk's tweets today on Tesla. This is Mark, of course, a huge fan of Tesla. I'm pulling it up right now. It goes.
I didn't see what tweets are talking about. Is he talking about the ESG thing?
I don't know. I think it's about the bots. Ladies mansplaining is short for man explaining. Oh, Jesus. Wise words. Like there's so many weird.
Yeah, because he tweets all the time. So
like he's tweeting like any party more moderate on the issues than the Rebs, and it would be ideal. Okay, I don't care about that. Good night, sweet Mastro. Okay.
Ask Mark what is he referencing?
Yeah, what is specifically are you asking? Because he's asking about thoughts on Tesla after Musk's tweets. So there's something about
what did he tweet though? I don't know what he tweeted.
Yeah,
I don't know what.
He's choosing Republican over Democrat. It's not rich people always choose Republicans. It's a known fact.
Yeah, I don't think that's going to matter too much for the stock. I'm more concerned about Tesla.
Don't want a CEO choosing sides. They all choose sides.
Yeah, they all
CEOs all choose sides. By the way, if you're listening to this on the audio version and not the live version, make sure you click the top link in the show notes. That's to join our Facebook group that is called Stock Market for Beginners. It's going to help you become the number one, become a better investor and get your money up in the stock market. Okay, go ahead, Tony. Sorry.
To Mark's point, though, there are going to be people, no matter if you publicly come out and pick any side, there are going to be people that might sell off stock just out of principle because of that. Of course, there's always going to be those people. But then to the flip side, there might be people that buy the stock just because of that.
Yeah.
So I wouldn't really consider. I would be more concerned about Tesla being able to hit their revenue every single quarter. That's what I'm more concerned about. And listen, there's a lot of negative right now. This is what I wanted to talk about.
Yeah.
There's so much negative, and like every news story you read is about the market's going to decline 28%, 38%. Oh, we're in a recession, blah, blah, blah. Always something negative. The wars, the lockdowns. It never ends. But I wanted to talk about some of the pros and cons. So give people some positive, so we can talk about.
Let's go, Tony. Let's go, Stock Bro. Tell us what we got. Tell us what we're going.
So let's get the cons over with first. Let's talk about the cons, right? A lot of people say we're in unprecedented times. We've never seen anything like this before. We got, recession fears. We got COVID. We got the China lockdowns again. We got the Russia-Ukraine war going on. We have high inflation. We have supply chain issues. We have rising interest rates. We have high unemployment. We have, unemployment is growing. We have slow GDP growth. We have potentially stagflation, which is something nobody wants. It's long periods of like rising inflation, high unemployment in unison together, which ultimately means several quarters of no economic growth, right? So these are all the cons. These are all the reasons why everybody's panicked. There could be a couple other things, but this is the main issues, right? These are all the main things going on in the world where we're saying we've never seen anything like this before. Well, let me tell you, we have seen almost this exact situation, minus COVID, but in the 70s and 80s, we had massive inflation. We had, in the United States, we actually had higher inflation than we do now. It was over 14% inflation. And Paul Volcker, who was the chairman of the Federal Reserve at that time, he didn't raise interest rates like 0.5%, 1/4% to ease into it. He raised interest rates 19% in a
He just
single,
said,
yeah,
"Screw it, we're going in."
absolutely destroyed the economy, like the real economy, not just the stock market. We saw massive shortages. Like we think gas is bad now. In the 70s, in 79 and 73, they literally had to wait in line to get gas for like a mile long line. And they can only fill up on days where their license plate or social security number matched, like if your license plate ended in N or Q or whatever, then you could get gas on a Thursday. Like they literally dictated what days you can get gas based on your license plate numbers. And oftentimes when they would finish waiting in line for hours at a time, there would be no gas when they got to their turn. Like it was absolutely insane. Not only that, we had the Iran-Iraq war. We had the Soviet-Afghanistan war, which a lot of people forgot about. That was a big deal, which many people say actually was the demise of the Soviet Union. You had the Lebanon war. You had the bombings in Syria. You had the Chernobyl crisis, which was the biggest nuclear disaster ever in history. Like in 1980s, we had that.
And right now we're looking at possibly Chernobyl
Right.
2 with what's going on in Ukraine, so that's fun.
Yeah. And that actually, ironically enough, that actually happened in Ukraine. Chernobyl was in Ukraine, which at that time was part of the Soviet Union. And Ukraine had a lot of nuclear weapons in their state, and they also have that nuclear reactor. And it was, the biggest disaster at the time, which obviously caused massive panic in the stock market. You also had not only that, overlying all of these issues, you had the Cold War between Russia or between the Soviet Union and the United States, which both had nuclear weapons, which was basically like a 40-year standoff. You also had, last but not least, you had the Coke crisis, the 1985 Coke changing their formula.
And they're coming out with Coke coffee. They're doing it again.
Yeah.
History repeats itself, people. We're in the same route. We have Coke coming out with a new product. We have the Chernobyl 2 event coming up. Tony's just proven that history repeats itself, people.
So a
Mic
lot of
drop, and I'm
people,
out of here. I'm buying a
yeah,
bunker.
a lot of people are always saying like we've never seen this before in history. Like we have all these crazy things happening right now. We've seen all of these things in history, and we've seen worse actually. We've been through pandemics. The 70s and 80s didn't have a pandemic per se, but it had record high inflation that we haven't seen since the 1940s, which was insane. And we had basically 15 years of high interest rates, high unemployment, oil reserve crisis, wars, cold wars, nuclear disasters. The 3 Mile Island nuclear issue was a problem too in the 70s and 80s. There was a documentary about that a while back on Netflix. 3 Mile Island was an island in Pennsylvania where the nuclear reactor was like literally about to blow, and it was emitting radiation all over the town. I mean, we've been through so many bad things, like short of an actual nuclear war where we just all blow each other up.
You want to
The
not
stock
say that
market's,
because you
yeah,
seem to be a forebearer of future here.
yeah. Well, short of that happening, or perhaps an alien invasion where they take over the world, the stock market's going to go back up, and in particular, the S&P 500 is going to go back up. Apple's going to remain a powerhouse company. Microsoft's not going anywhere. Google's not going anywhere, and rumors of Amazon's demise are greatly exaggerated as well. So my take is, uh, honestly, things are getting cheap. Like stocks are getting cheap.
It's
Um,
time to buy, 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 buy.
and over the last 12 months, the stock, I know this year has been tough. Over the last 12 months, though, the stock market, the total market in general, is only down like 5% over a 12-month period. So, if you've been in the stock market for years, the last 12 months hasn't really been that bad. It's been the last 5 months that have kind of sucked. Uh,
This is it
now,
over the last 5 years.
yeah, yeah, and
It's up 61%. Like, come on. Over
yeah,
max. Let's look over the max time. It's up
it's
a
insane.
lot. It's up a lot.
And actually, you know what? It actually needs to come down because if you look at what I mean, it's starting to look like a mountain rather than an actual 45-degree line. So we're starting to get things are getting really overvalued. And Lloyd brought this up in a podcast. I don't remember when, but it was probably a couple months ago where we talked about, listen, the S&P 500 historically returns 10% a year. Over the last 5 years, we were getting outrageous. Like it was returning 20% per year. So at some point, if we have history of 120-year history, at some point we're going to revert back to the mean, where we're gonna get back down to that average. Every 5 years, it's going to look more like a 50% return rather than a 110% return. So now we're at what, 61%?
Yeah, we're at 61 in the last
So
5.
yeah, so it could probably come down another 10%, and now we're back at the 5-year average, the historical average of 10% per year. So, things are coming back down to where they should be because we reached a period where it was just we were seeing massive amounts of overvalued companies. And I actually saw a statistic where companies were earnings uh, before COVID, like companies like Apple, Google, Microsoft had like 6 times, 8 times earnings to their stock price. And then when during the 2020 pandemic where interest rates dropped to zero, their earnings were like insane. It was like 12, 13 times earnings. And now they're starting to come back down, which is a really good sign. Uh, we're going to see some economic growth slowing down. We're going to see some unemployment rise. We're going to see interest rates rise. Short term, it's going to be rough. It's going to be a lot of volatility. It's going to be a lot of painful days if you're watching your account every single day, all day long. You're going to be very stressed out. You're going to have gray hair very fast.
Or
uh,
go bald like Tony.
yeah, or well, I'm not bald. I just, I'm gonna have to grow it out one day so I can prove
Yeah, just prove it that you're not bald.
it. But I am going gray, so I can't lie about that. I am
Well, you have a
going
kid.
gray.
That's why. That's why you're
Yeah.
going gray.
Well, yeah. So, uh, but what I was saying was short term, we're going to see a lot of pain, but long term, I think barring
You're
a
set.
disaster, a nuclear war or whatever, then I think we're just it's going to be good. It's going to be bullish.
All right. I
So
got a question here from the group. Again, that group is Stock Market for Beginners. You can find us on Facebook. I got Jerry Sinner here saying, "Hey, everyone. I have a question. I currently have a 401k through work. I put 5% and my employer matches 4%. I was tempted to add another 5% to my contribution for a total of 10%. But in this market, should I? Does it follow the same concept as buy low?"
yeah, so my take on 401ks, especially with an employer match, is you should put up to whatever your employer matches. So if they match you dollar, usually it's always up to a percentage. So most employers in the United States, like a very large percentage of them, will match you 50% up to 6%. So if you put 6% in, they'll put 3% in, it'll be a total of 9%. If you have an employer that matches 100% up to 6%, then do 12, do your full 6% and you'll get 12%. I just do the full Like I do 6%, my employer does 3%. And I don't do more than that, and I could, but excuse me. Here's the thing. If you put too much money into your 401k or you're putting too much of your paycheck, especially right now, uh, just because the market's down, we're probably going to be going in a recession. A lot of people, you're going to need more cash than you've actually needed before in the past couple years. Gas is going to be more expensive, food's going to be more expensive, rent's going up. You might have interest rates going up on credit cards. If you need to buy a car, it's going to be more expensive. So your cost of living, everything is going to be more expensive. So you shouldn't be putting too much money into your 401k that you might actually need that money. Just do whatever the max is that your company is going to contribute to, which is typically you put in 6%, they'll give you 3%. And here's the other thing too. If say years from now, you have something happen where you need a large sum of cash, now you got to go to your 401k and you got to take out money out of your 401k because you don't have you didn't have enough extra money to save it or invest it on the side. That's why I have an individual brokerage account through Fidelity that is taxable, because I max out my 401k and I don't put anything more than I need to than whatever the employer gives me, because I want to have money that yes, it's taxable and I have to pay tax on it if I take it out, but at least I can take it out and do anything I want with that money instead of having to contact my HR rep, having to contact my 401k manager, and then having to pay fees, wait for them to give me the money, pay a 10% early withdrawal, pay all the taxes on it. It's just a hassle. And then potentially have to pay it back as well. Sometimes you have to pay back whatever you take out. So I just don't want to have to deal with any of these special circumstances, whereas I could just take it out of my separate account that's taxable anytime I want. So it makes
There you
sense.
go.
Yeah.
Great advice from the stock bro himself, Tony Samensky, here on Stock Dirty to Me, the #1 podcast for beginner investors on Facebook. I like saying that. Make sure you tell your friends about us too. Invite your friends to the group. We want more people from.
Tell your friends. What's that from?
Yeah,
Tell your friends.
I don't know.
Come
Hold
on,
let me Google it. Okay, I'm going to Google it. Give me a second here. Let me Google thing.
That's from like a popular TV show or something, right?
It's a Weekend song.
No. It was before that.
Well, listen. I just put in "tell your friends." First thing that pops up is The Weekend.
It was an original. I don't know. I'll have to figure that out in my own time because now it's going to bother me.
It could be from Friends if you want. I don't know.
It could be. I don't know. I thought it was from a TV show.
I don't know.
But anyways, yeah.
Yeah, but tell your friends. Tell if you want. If you're watching this live, we want to thank you. You guys are awesome. You guys are the reasons we do this show every Thursday at 7:30 p.m. Eastern Standard Time in the Facebook group Stock Market for Beginners. If you have questions, make sure you hit them in the chat. Let us know if you're watching live by hitting #live. If you're part of the replay gang, my favorite gang of all gangs, make sure you hit that #replay gang. It's true, they are. I have had many pleasant conversations with the replay gang, and they are the best gang in the world. I discount all other gangs except for this gang, and they're the only gangs I will rep their colors. We have to choose colors for them. Oh my God! Can you tell I'm high off sick cold medicine because I'm fighting off a cold?
Oh man, everybody I know is sick right now. I'm still like kind of sick / allergies. It's insane.
It's the worst thing ever.
It's horrible. It's horrible.
Anything else you want to talk about? Anything else you got on your mind?
I mean, yeah. I honestly, to be honest, I haven't looked at like the trending news that's happening this week. I've seen all the negative stories, and I figured instead of always talking about the negative, we should talk about some of the positive today. So hopefully, a lot of people watch this and they feel a little bit better about holding on to their investments. Because listen, at this point, a lot of people in the group are still new, and anything you're selling, you're just selling at a loss, and you're selling most likely if you have Apple and Microsoft, there's no reason to be selling. I mean, it's stupid. You're just locking in losses for yourself, and you're transferring your wealth to someone else like me who keeps buying everything you sell, and then 5 years from now, I'm going to have way more profits than you will, because you're going to try to time. That's how
Lloyd got his $1 million.
Yeah, you're going to try to time the market and get back in when you think the bottom hit, but you're probably going to miss a lot of the recovery doing that. So,
There
yeah,
we go. The bottom is always today, and you start buying today. That's the rule of thumb.
I,
That's what I
I
would
would
say. Buy, buy, buy.
suggest, as a last thought, I would suggest people look up. You could probably look up some videos on YouTube about Paul Volcker. He's done a lot of interviews. He's dead now, but he's done a lot of interviews with like MSNBC, Yahoo, like all those top Business Insider, whatnot. And he has a lot of really good insights of how the economy works. I listened to a lot of his stuff, how the economy works, how the Federal Reserve is supposed to work, how the monetary system operates, and all the. It's really excellent interviews that he gives, and he talks about inflation. He talks about all the things that happened in the 70s and 80s. If you go back and you listen to that, you'll feel a lot better about things that are happening today because we've been through all this. We've been through all this stuff
This is like
before.
the third time we're going through this. Like, if you look back, we were through this in the First World War. The Second World War had something similar to this. You had the Great Depression, which lasted
Guys,
all of like the 30s, right? Or
the
40s or
Great
50s.
Depression, yeah, the Great Depression I mean, was absolutely horrendous. I mean, it
Yeah.
took so long to recover from that. And things were, we didn't, the reason why too is a lot of people like the next Great Depression. Well, back then they didn't have a lot of the regulations that we have today. They didn't
Yeah.
even have banking insurance. So people were literally lining up at banks to take out their cash in fear.
Yeah.
So that's not gonna, I mean, most, knock on wood,
A
it's not gonna
great
happen.
recession like that's not going to happen again. That's never
Yeah,
happening again, I don't
I
think.
would say, I wouldn't even say this is like 2008 because 2008 was such a bad time with the mortgage crisis. I don't, because we're not seeing that now. We don't have a mortgage crisis now,
No.
where people were literally going homeless. So I just think we're going to have a bad year. I think it's going to be a really volatile up and down year. Nobody knows for sure what's going to happen. This is just my guess. I think we're gonna have a very volatile year. It's gonna bottom out sometime by the end of the year, and then we'll start the slow recovery process. But here's the other thing, Phil. All it takes is one thing to go like in this economy with market sentiment the way it is. If Russia just decides tomorrow we're done with Ukraine, like the war's over, the stock market's gonna pop. Like it's gonna go up probably 5% in one day, and you're going to miss out on those gains. Or if the Chinese COVID, the lockdowns end in China, that's going to make the stock market go up. If supply chain eases, that's going to any like little thing like good data on unemployment. All it takes is like a couple things to come in place, and then boom, we're back up. You know, so it's going to happen. You just gotta be patient. You know.
There we go. Wise words from the stock bro himself. You can find Tony. Where can we find you, Tony? Since we're going to wrap up the show today, since we don't have
Yeah,
the big gun today.
Yeah, the Stock Bros podcast, and I'll drop my latest episode. I just talked about the latest information with Twitter and the Twitter buyout with Elon
Oh
Musk.
yeah,
So
that's interesting.
the
Bots. If I
saga,
don't know, the
the
saga
saga
continues. It's worse than the
continues.
Star Wars saga. This one, I swear to God, it's worse than the Star Wars saga.
It's
Ladies and
bad.
gentlemen, of course, our other co-host, Mr. Lloyd Ross, the Millionaire Money Mentor, can be found on his podcast, Money Grows on Trees, an amazing podcast that can teach you to increase your financial IQ. If you're interested in finding out how to become a digital entrepreneur and earn some extra cash on the side, I highly suggest you check out my podcast, Invest in Yourself, the Digital Entrepreneur Podcast, which is an award-winning podcast in the business
Yes.
categories. So it is a very good podcast for you guys to listen to. You can find that at investinyourselfpod.com. I'm, of course, Phil Better, the podcast mogul. He's Tony Samansky. And when in doubt, no, it's when you don't know what to do, buy
Yes,
VOO.
just buy VOO.
Just buy VOO.
And buy my investing course.
Yes. Also, before you even buy VOO, buy the ABCs of investing by our man Tony Samansky.
Thank you.
And then once you get
220 students,
let's
4.7
go,
stars.
going
Let's
bigger
go.
and bigger. We got to get you a website. Got to get you a website so you can start funneling that people into your next course.
I know. Yeah.
And you can start charging proper cash for it and make you money. We'll talk to Lloyd about that. But ladies and gentlemen, that's the show. We want to thank you very much for tuning in. You guys are always amazing. If you're listening to the podcast version, make sure you come over and join the group because we're doing amazing things, helping you grow your show, grow your portfolio, and that's all we want from you. So from our hearts to your hearts, our mouth to your ears. I don't know. I really
Our
need
mouth
to shut
to
up.
your mouth.
Yeah, our mouth to your ears. I don't know. Just follow the term, buy some VU, and you're good to go. Ladies and gentlemen, have a great day.